Good day Forex trader. Your USD Forex signal, strong bearish trend continues. The price has reached new one-year lows below $1.1200. Last Thursday's Euro USD signal produced a losing short trade from the hourly doji candlestick which rejected the resistance level I had identified at $1.1338. Today's Euro USD signals. Risk 0.75%. Trades must be entered between 8 a.m. and 5 p.m. London time today only. Your USD analysis. I wrote last Thursday that we could probably rely upon the bearish momentum provided the price stayed below $1.1338. This was a good call as after breaking above that level, the price closed firmly up on the day. However, I was wrong in my forecast for a down day. Yet developments over the past week have seen my focus on the long-term bearish trend continuing proven to be correct. The euro has continued to be very weak ever since the ECB appeared to rule out a rate hike in 2022, while the US dollar has broken above formerly key resistance. There are no fundamental factors at work to weaken the dollar or strengthen the euro. Technically, the price has continued to fall strongly, and despite the bullish retracements this currency pair is always prone to within a trend, the bearish trend is clearly still active. The only question is where support may kick in. We may already have seen that at $1.1195 but the bullish bounce from there has been weak, so I am not impressed by it. I do not see any reason to call an end to the long-term bearish move. I maintain a bearish bias and continue to see a short trade opportunity here. The best setup would be a firm bearish rejection of the nearest resistance level at $1.1234, which looks likely to be solid. Trading is likely to be thin towards the end of the London session due to today's public holiday in the USA. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1234 or $1.1271. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1195 or $1.1155. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. GBP USD Forex signal, drop below support puts 1.3200 in view. The GBP/USD price continued its free fall as investors reacted to the relatively strong economic data from the United States. Bearish view. Sell the GBP USD pair and set a take profit at 1.3250. Add a stop loss at 1.3400. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3350 and a take profit at 1.3450. Add a stop loss at 1.3250. The GBP USD price continued its free fall as investors reacted to the relatively strong economic data from the United States. These numbers fueled the thinking that the Federal Reserve will be relatively hawkish going forward. It is trading at 1.3335, which was the lowest level since December last year. Strong US data. Like in the UK, economic numbers published by the US on Wednesday were better than expected. These numbers suggested that the economy is doing well. For example, data published earlier this month showed that the unemployment rate dropped to a pandemic-era low of 4.6%. The US published data that showed that indeed, the labor market is tightening. Initial jobless claims tumbled to a 52-year low of 199,000 last week. This was a better figure than the median estimate of 260K. Continuing jobless claims declined to slightly above 2 million. At the same time, the closely watched Personal Consumption Expenditure Index rose to 5% in October, which was the biggest increase in about 3 decades. Therefore, these numbers signal that the Federal Reserve will embrace a more hawkish view. Besides, the two main roles of the bank is to ensure that the unemployment rate is low and that inflation is maintained. The GBP/USD also reacted to the relatively strong American new home sales numbers. The data showed that sales of new homes jumped from 742 in September to 745K in October. Further numbers revealed that household consumption rose by 1.3% while incomes rose by 0.5%. The same trend has been happening in the UK, where retail sales and inflation have risen while the unemployment rate has dropped substantially in the past few weeks. The volume will be relatively low today since US markets will be closed for Thanksgiving. Still, the pair will likely react to a statement by Andrew Bailey of the Bank of England. GBP/USD forecast. The daily chart shows that the GBP/USD pair has been in a major bearish trend lately. The pair managed to move below the important support at 1.3350, which was the lowest level on November 15. It has also formed a descending channel that is shown in red. The pair has also dropped below the 25-day and 50-day moving averages while the stochastic oscillator has moved below the oversold level. Therefore, the pair will likely keep falling as bears target the key support at 1.3250, which is along the lower side of the channel. AUD/USD Forex signal, bearish trend has more room to run. The pair will likely keep falling as bears target the second support at 0.7130, which is about 0.9% below the current level. Bearish view. Sell the AUD/USD and set a take profit at 0.7130. Add a stop loss at 0.7300. Timeline, 1 to 2 days. Bullish view. Buy the AUD/USD and set a take profit at 0.7300. Add a stop loss at 0.7200. The AUD/USD pair dropped to the lowest level since September 30 mostly because of the stronger US dollar. The pair is trading at 0.7200, which is about 4.8% below the highest level this month. Strong US dollar. The Australian dollar has fallen against the US dollar as investors price in a more hawkish Federal Reserve. In its most recent interest rate decision, the Fed started tapering its asset purchases by about $15 billion. The bank also committed to adjust the size of the tapering depending on the pace of the economic recovery. Now, it seems like the pace is relatively strong. Data published on Wednesday showed that number of people filing for initial jobless claims dropped to the lowest level in more than 50 years. This was a surprise report since the number surged to an all-time high of more than 20 million last year. Therefore, there is a likelihood that the country's unemployment rate will keep falling in the coming months. At the same time, the U.S. published strong personal consumer expenditure, PCE, data. The number, which the Fed watches closely, rose to 5% in October, the highest level in more than 30 years. Other numbers from the U.S. painted a picture of an economy that is firing on all cylinders. New home sales jumped sharply in October. In the same period, durable goods orders also jumped. Therefore, the AUD/USD pair has dropped because analysts expect that the Fed will move faster than the Reserve Bank of Australia, RBA. Indeed, the bank has repeatedly hinted that it will implement the first rate hike in 2024. This is despite the fact that the country's economy has recovered at a relatively faster rate. AUD/USD forecast. The 4-hour chart shows that the AUD/USD pair has been in a strong bearish trend in the past few weeks. The downward trend has been supported by the 25-day and 50-day moving averages. The pair is slightly above 0.7170, which was the lowest level on September 30. It has also moved to the first support of the standard pivot points. Therefore, the pair will likely keep falling as bears target the second support at 0.7130, which is about 0.9% below the current level. Still, in the coming days, there is a likelihood that the pair will bounce back as investors buy the dips.